Hello and welcome to NDTV Profit. I am Vikas Srivastava, and today we are joined by two gentlemen, Mr. Sharad Mahendra, who is the Joint Managing Director and CEO of JSW Energy, and Mr. Pritesh Vinay, who is the CFO of JSW Energy. The company has raised 5,000 crore rupees in QIP, which is billed as one of the largest in the history of India's fundraising as far as QIP is concerned. The company is gung-ho about renewable energy business and plans to use this fund, majority of this fund, in this business. Welcome to NDTV Profit, gentlemen.
Thank you.
Thank you very much.
Thank you very much.
Sir, I would like to begin with you, Mr. Mahendra. If you can take our viewers through this fundraise, and if you can talk about the significance and what kind of role it will play as far as the growth strategy of the company is concerned.
Right. Yes, Vikas, before I come to the fundraise, it is important to understand how the sector is evolving, how it has been in past few years and what it looks like going forward. When we see that the way Indian economy is growing, one of the fastest growing large economy in the world, and there has been a perfect correlation between the GDP and the power demand, maybe close to 1:1. But in last 3 years, if we see, when the GDP growth has been 6.5–7%, the power demand has grown in the range of 8 to 10%. So it is maybe 1.2 times the GDP. And it has been seen that when the GDP is in the range of 6.5 to 7%, this factor is in excess of 1.
Okay.
And the way we have just seen that again, for this current fiscal which has just started, RBI has again said 7% growth. So we are confident that power demand growth will continue to be good. And when we see FY22, if we see that the peak demand was maybe about 203 gigawatt. And recently the number has come, summers have started, that this summer this peak demand is expected to reach 260 gigawatt, from 203 gigawatt to 260 gigawatt. Which clearly demonstrates the need of incremental power, and the incremental power majorly with Government of India's clear goal and target of achieving in excess of 500 gigawatt of renewable energy. This means a huge capacity addition year on year, which has been demonstrated also if we see the year which has just ended, FY24, almost in excess of 40 gigawatt of bidding, close to 50 gigawatt in fact, bidding has taken place, which means that the Government of India's target of adding 50 gigawatt every year is we are going to see now happening also. All these things put together, we at JSW Energy also, if you recall that about 2 years back, we announced our strategy 2.0 of reaching 20 gigawatt by FY30, which was then divided into 2 phases, saying that by FY25 we will reach 10 gigawatt, and then by FY30 another 10, taking it to 20 gigawatt. I am happy to tell that the year which has just ended, we are at a capacity of 7.2 gigawatt, close to that we have ended the year, and in excess of 2.6 gigawatt of work which is already happening on various projects. We are absolutely confident that our phase 1 of 10 gigawatt which we have announced in the market to reaching by FY25 will definitely be achieving or slightly surpassing that. Then another 10 gigawatt taking it to to 20 gigawatt by FY30. Here the way things have evolved in last 1 year, and we have seen that the opportunities which are there, which are favorable, which are conducive, in terms we started participating in the competitive bidding in a big way, and in the last 60 days we have won at a very attractive tariffs a capacity of 3.7 gigawatt in last 65 days only. And with our group captive requirement also, everything, we have an order book of in excess of 6.5 gigawatt which we have to execute. So 20 gigawatt FY30, we are absolutely confident, and we are quite sure with the changed environment that we will be accelerating the growth and will be reaching 30 gigawatt significantly earlier, maybe few years earlier than FY30.
Okay.
And to accelerate this growth, this QIP, for which maybe my colleague Pritesh will speak more in detail, this QIP is a major enabler for us to accelerate the growth, which we see as a huge opportunity in the country and for JSW Energy, giving our investors, giving our shareholders attractive returns also.
Right. Mr. Pritesh, if you can talk a little bit, as Mr. Mahendra said, about this QIP, where the fund is likely to be allocated, because you already have a conventional business, then you have a renewable, and now you also plan to enter into a lot of green energy businesses like hydrogen and all. So if you can give a breakup of where exactly you plan to use this funding.
So, as Sharad was just saying, in terms of if you look at our path to 10 gigawatt or even beyond that, 100% of that, is for green energy businesses, right? So my immediate order book is for green energy businesses, and hence a large majority of the funds that we have raised are going to be deployed there itself. But to put this in an overall context and take a step back, if you look at my existing size, or as we get to 10 gigawatt, which is under completion, the annual free cash flow that we would be generating would be through the order of about 3,000 crores or just over that.
By when?
When we go to 10 gigawatt capacity, right? So when that business is annually generating cash, the free cash generation is about 3 to 3,500 crores. At a 3:1 debt equity funding ratio, that gives me the ability to spend between 12 to 15,000 crores any given year. This is before this raise. Now, what this raise does is this, that again on a 3:1, on a 5,000 crore equity, you can borrow an additional 15,000 crore and do a 20,000 crore additional spend, right? Hence, the way to look at it is that this is pure growth capital. And given that in the interim, all the pipeline of growth projects are green only, so it is safe to assume that a large majority of this will be going to be deployed in growing the green business and its derivatives.
Right. And
yeah, also to add, Vikas, what Pritesh said, that when we talk of that government is saying that maybe 40 gigawatt or 50 gigawatt of renewable energy capacity addition every year, this entails an investment in the country in this space in excess of $30–35 billion every year.
right.
If this capacity is to be added, and this is to be added. So this again, this capital raise enables us to play a significant role in this opportunity which is now there in the country for next 5 years or next decade.
Yeah. So one thing I wanted to ask you, you spoke about by 2030 when you'll become cash generative in excess of 3,000 crore. But this 5,000 crore that you have raised right now, how much or for how long this is going to be sufficient, and when next you would be looking for fundraise?
So first thing I'd like to clarify is 3,500 crore free cash flow is not 2030, it is 2025.
Oh,
when we go to 10 gigawatt capacity,
right.
end of this year, right? So therefore, I would say that, to be very honest, one is the organic pipeline that Sharad talked about, right? That is, we have a visibility of 6 gigawatt plus of order book, in addition to what we are already executing. Then there is an inorganic opportunity as well, right? Because last year, if you would recall, we had done a large acquisition of a 1.75 gigawatt platform, right? Today, as we are speaking, there is about 10 to 15 gigawatt of renewable capacity, which is likely to change ownership because, the current principal shareholders, which are financial sponsors, their fund lives are coming to an end. So a number of such processes are currently underway or about to be launched. So if you look at the size of the opportunity on both organic as well as inorganic, it is quite substantial. So the honest answer to your question is this, that for how long will this sustain? Look, if it's only organic, then at least for the next 2 to 3 years we are okay. But if suddenly a very accretive inorganic opportunity also comes our way, which you can't predict, which you can't forecast because it's a competitive process and value, returns, etc., all of that will mind, then possibly this can be used faster than that.
Right. But definitely you all must be in talks with couple of them, if you can talk or if you would like to talk about some of these.
No, because actually we keep, this is a continuous process. Some platforms, some capacities are always there in the market. So rather than, instead of naming any specific, we have a dedicated team which scans the environment, scans each and every opportunity, then ultimately what is the value, what are the returns on that, because our benchmarks are a bit tight in the sense that our ability of execution ability of greenfield project at one of the lowest per megawatt cost, that is what we are known for, and also the time is a value. Fast execution at the lowest cost, we benchmark all opportunities in the market that if I have to compare, also giving the benefit that those opportunities if I acquire start giving me the cash return immediately. All those we evaluate, a detailed evaluation process is there of the opportunities which are available. So we are evaluating, we will continue to evaluate, and as I said, which are the opportunities which are giving best returns to us, to our shareholders, then only we will decide on that.
Since we are talking about investments, you said that India will require almost $20 to $30 billion by 2030, and you also have a plan to reach till 20 gigawatt by 2030. So what kind of investments you see for your company between this period, and how you plan to raise that?
Yeah.
Part would be, you said, through internal accruals,
Yes.
but which are the other opportunities?
See, if we see that, as I told, that 20 gigawatt by FY30, we will be FY25 will be 10 gigawatt, and I'm saying that we will be accelerating our growth, assuming that we accelerate by 1 or 2 years. So another 10 gigawatt in a span of 3 to 4 years time, if we have to achieve. So per megawatt cost, whatever you take, and then we convert. So I don't think that we are comfortable in terms of the capex which is required for 3 to 4 gigawatt every year, and we are very, very comfortable. Pritesh will tell more about our internal accruals and what we have for fundraise which we have done. So we have made ourselves future ready in terms of any organic, inorganic opportunities, and to ensure that we accelerate our 20 gigawatt of growth, which was earlier FY30 to an earlier date, couple of years earlier.
Would you like to add to that?
Yeah, maybe I'll help with some framework or some perspective to look at it, right? You know, when we came out with Strategy 2.0 at the end of fiscal 2023, at that time, based on the path, the growth path that we had charted out, saying, you know, 20 gigawatt of generation and 40 gigawatt hour of storage, both of these by 2030, if we have to achieve, we were looking at a total cumulative 7-year spend of about $13 billion. That was a number that we talked about. But if we are now looking at accelerating that growth, then that number is going to be higher than that, right? That's one. But more importantly, from stakeholders' point of view, from shareholders' point of view, what is important to understand is this, that we will continue to be judicious and prudent in all capital allocation decisions. We will continue to retain our competitive moats, which are industry-leading lowest capex per megawatt, industry-leading lowest O&M cost per megawatt, and one of the highest credit ratings in the private sector, which makes our financing cost one of the most competitive in the sector. So therefore, protecting the credit ratings is going to be sacrosanct, and hence the leverage profile is going to be managed in such a way that on a sustained normalized net debt to EBITDA basis, we do not cross 4 times net debt to EBITDA. That will be their guardrail by way of which any growth opportunity that we are going to be evaluating, that is how we are going to go about it.
Right. So you are almost close to 8 gigawatt right now. You have to add another 12 gigawatt in next say 4 to 5 years, right? So you had predicted close to $13 billion of investment. How much is already invested, and how much you will require for this 12?
So of the 13, including FY24, what we had to spend, I would say we have already spent $1 billion. So for the 6 years that remain, we need to spend another, say, $12 billion, right? So on an average, $2 billion a year. So if you remember what I had said, that 12 to 15,000 crore capex we could have done every year, you know, just on a steady state 3,000 to 3,500 crore cash flow. But that cash flow would have increased every year because the capacity would have been increasing every year. So on a progressive basis, roughly, you know, $2 billion capex per year was what we had kind of budgeted for as an average for 7 years, right? But that is likely to be higher progressively going ahead as we accelerate the growth. Yeah.
Okay. Coming to this renewable energy business, we are talking about adding so many capacities and all. Can you take our viewers through to your plans as far as pumped hydro storage business is concerned? What is the current status on that, since you have also won quite a few of them? So how do you see, and also as far as adoption of this within the industry is concerned?
Yeah. See, pump storage again is a very, very important addition in the entire energy space in the country for various reasons. One is that looking for a round the clock green power solution coupled with solar wind hybrid and pump storage. This is a very good combination, cost effective combination for the industry. Second option is that we understand the flexibility, the any kind of storage, whether it is battery storage, which I'll also talk about, and the pump storage, gives the flexibility of the time of the day power. Peak demands we are seeing that are going to maybe 8 rupees, 9 rupees, 10 rupees also the prices are going. So that is the flexibility in a pump storage that the DISCOM or the buyer or the state can define, that if it's a 8-hour storage, what hourly to in which hours, maybe in 2 slots or 3, they want the power to be to optimize their cost of power also. Yes, said this, and also last is with the increased share in the coming years of renewable energy, grid stability is also very important. Peak daytime when solar increases so much, evenings time when wind increases so much, grid stability is also very, very key, that infrastructure. So there also pump storage is going to play a very, very important role in providing the stability. But not limiting to this, I will say, because this is a project which is the time required to execute the project is significantly higher. The pre-project activities alone are ranges from 1.5 to 2 years, and then the on-ground work starts. It takes another 4 years, 5 years, depending on the sites, because these all are remote sites. Battery storage, which again provides the similar kind of solution. Quantum can be limited, but it is providing the same features what I told about the pump storage, is something which was being talked for last 3 years, 4 years with lithium ion coming in, but again the battery cost was not allowing. But last 1.5 years we have seen that the battery prices have moderated in a significant way, making it close to a viable solution now. So battery storage is something which already the requirements have started coming in. JSW Energy, we have won the largest battery storage bid of 1 gigawatt hour, largest in the country and one of the largest in the world, which we are now starting the execution of the project. A part capacity PPA has already been signed for that. So advantage of this battery storage is again the same. It provides what time the grid is most unstable, that is the time when the grid stability it caters to, and also the peak hour demand replacement. Battery storage also provides that. Now battery storage coupled with hydro and wind and solar, RTC green solution, and FDRE is something which is new now. Fixed dispatchable renewable energy, wherein every hour what the state needs, depending on what level of industrialization is in a state. Maybe a state like Maharashtra will have a different usage pattern at different hours of the day. A state like Bihar or UP, where it is agriculture, especially Bihar, I will say, or Jharkhand, which is agriculture dominated in the economy, there the pattern will be different. So what is the hourly pattern? So this is where a very, very high capability in planning and execution is required, where at JSW Energy now we have created a dedicated team is there to understand the load profiles on an hourly basis for each state on the past data basis, and also the future manufacturing, industrialization, service sector growth, everything, all factors are considered, and we design a tailor-made solution for each state, that this is the best solution going forward for the state. Now some competitive bid came also in FDRE space, and we won a decent capacity in that, which we are going to execute FDRE solution, which is a mix of wind, solar and battery storage.
Since you spoke about battery storage also, the major issue or complications that people were facing was cost, as you already said. So can you say, like, since you have won such big projects, what the kind of cost reduction you have seen,
Yeah.
And what will be the unit per unit cost for consumers?
See, normally this model, because works on a different way. Of course, ultimately it will convert to unit cost, but this is basically a lease model.
Okay.
Lease model is that I set up a storage plant and I get a monthly lease rental.
No.
And the power I have to inject at a particular time period when the buyer is asking for. And some excess capacity which I have the opportunity to sell in the merchant market during peak hours.
Okay.
So one is this. So it is basically a lease model which we work on. And when we talk of FDRE, it's a mix of per unit cost, wherein we take battery storage as a project cost, energy generation from wind and solar, and providing a hourly solution to the buyer at what per unit cost.
Okay.
So that is how this model works. And then apart from this storage, when we are talking, you asked something else also, which I just missed, but yes, this is how the battery storage plant
I asked on
operates.
the cost, like
Yeah, cost
so
side.
you already said.
Cost side, yes. Maybe if we go back 2 years, 3 years period, we see the lithium ion, what levels it was. It has significantly reduced what it was anticipated 3 years back and what today it is. Without going into a particular number, because the storage is not only lithium ion, it's a significant portion of the cost, but there is balance of plant cost also. But there is a significant reduction, I can say, in the cost. As I told you, that it is today viable, clearly viable for again as a replacement to peak hour demand.
If I may add to what Sharad has said, and therefore if you see interestingly, in order to entice the distribution utilities to come up and ask for storage solutions, given the high cost, in the last year's union budget, there was a viability gap funding allocation of 19,000 crores that was done. So that was basically the government stepping up and saying that, hey, the cost of storage on a standalone basis is higher, but here is a viability gap funding pool, which will kind of allay to a large extent, the burden on the distribution utilities, so that they come ahead with more and more solutions. So.
Since we are talking about renewable energy business and your green transition also, you all are taking so many steps. Last we had also heard that earlier you all had tied up with an Australian company for green hydrogen. So would you like to talk a little bit about green hydrogen plans for the company, how you all are looking at this business? And recently you won some 6.5 KTPA auction also.
Yeah. See, we now, in fact, it was earlier what you said, maybe discussions with an Australian company that was maybe a few years back, long time back. But now the technology, with the way it has evolved and way we have engaged with various players globally, we are going ahead with a setup with a 25 megawatt equivalent to the 6,800 what we have won. And we are setting up a 3,800 tons of hydrogen capacity, green hydrogen capacity for our group company JSW Steel, wherein this much along with coupled with the green oxygen, that is the solution which we will be providing to JSW Steel. But yes, economics point of view, this is more as a learning which we have taken to be future ready. So this is small quantum what we are doing, because ultimately it is the green steel which is being talked upon as and when it makes economic sense in a big way. The scale can be increased, so we have won that bid. We are going ahead in setting up that unit for our captive requirement within the group. And we are taking this as a learning measure to learn more and be ready for the large quantums in future.
So these are two projects you're talking. One is the SECI project, the 6.5
that is
KTPA, and
battery
the other
storage.
one is the JSW.
Yes.
Okay.
So, if I can just clarify on that one, if you see the site bid that you're talking about, that strategic intervention for green hydrogen allocation, if you see the minimum bid amount possible was 10,000 tons per annum and maximum was 90,000 tons per annum. Every player had to bid in that range. A lot of peers in the industry have actually gone ahead and bid for 90,000 tons or 60,000 tons in large size, right? We believe that for reasons that Sharad just clarified, that we think that it's a bit early in the day, and hence a lot of things have to fall into place from an ecosystem development, storage and transportation infrastructure, etc. Hence we are comfortable that This 6.5 KTPA will actually subsume the 3.8 KTPA with JSW Steel.
Okay.
So these are not two separate ones.
It's a part of
So
that.
it's so the question then is this, that there is now a gap of 2.7 KTPA over and above the 3.8 KTPA that we have already signed. So we are currently in discussion with JSW Steel and its subsidiaries of the additional needs of green hydrogen across, say, the downstream businesses, etc., where we will be able to scale this up to 6.5 KTPA for JSW Steel alone. Yeah.
And to make it cost effective, what we are doing is, if it is at JSW Steel Vijayanagar, we are setting up there, so we don't have to create a storage and a transportation infrastructure. At the location, only distributed capacities near, so that directly it can be fed rather than it
I think that is
optimizes
the kind
cost.
of approach most of the people are adopting, like independent cluster kind of setup.
Yes.
Basically there.
Yeah.
So this brings down the, what is the kind of cost that you have estimated for this plant or this project?
For which?
For
This-
both, for site as well as for JSW.
So for the 3,800 tons per annum project, we expect the capex cost to be in the range of roughly about, say, $20 million, under $20 million, right? It's a small one, as Sharad was saying. It's a pilot project, right? From an economics point of view, as far as JSW Energy is concerned, we have a mid-teen ROE protected. It's a cost plus 15.5% ROE. And to be amortized over 7 years of the life of the asset. So that's the economic construct. But more importantly, the bigger picture, as Sharad was saying, is to have a learning curve for both organizations, so that as and when the ecosystem really grows and we can scale it up materially. So the unit economics at such subscale is actually not material.
And also, like, if you see, 70% of the cost in green hydrogen is the energy cost. So there we are optimizing in terms of energy cost, what's the best solution we can provide in terms of the RTC green energy, so which is a must. So 70% of the cost is the energy cost.
So one additional question related to this and quietly related to this is, like, Europe is kind of imposing carbon tax from 2026, and JSW Steel being one of your group companies, they export a large amount of steel to Europe as well as US and other places, which is going to come up in US also after some time. So they have this trajectory where they want companies to bring down their carbon footprint. So you being a captive power supplier to JSW Steel also, so what kind of help you all are providing to your group company in terms of reducing their carbon footprint? One, as you already said, is green hydrogen. What could be the other measures?
See, we as as I said, that even in any manufacturing industry, especially steel, energy also plays a significant portion of the CO2 emission. So we, as being an energy company, can provide solutions limited to my area. So yes, what we are doing, we have already set up, commissioned about a year and a half back, 225 megawatt of solar captive plant. We are in the process of commissioning large capacities under captive for wind and solar also, and then also working on a project which is a wind solar pump storage hybrid kind of solution, wherein RTC green energy. So we are focusing fully with JSW Steel, contributing our bit in shifting from the fossil fuel to green energy. That is what the target, and that is what we can contribute to. We are working on.
One last question, especially we are talking big things, big numbers for a long period of time. What kind of challenges you see coming up or cropping up? You might be facing a lot. So which are the major challenges that you see and how you would like to?
Right. See, because challenges, definitely in anything when we do, there are challenges. But before coming to challenges, the opportunities, so much of opportunities are there which we have discussed. That India as an economy, the world is looking towards the fastest growing economy of this size. Now manufacturing contribution to the economy going to be significantly higher. Urbanization happening rapidly. All these are factors which are going to be the drivers for the demand growth. So these we see as the opportunities, and rather than the challenges, I will say the areas where we need to focus to ensure that what we say we are in a position to deliver, what we have been doing till now, is the execution challenges in the country, especially in the green space, where it is not like a thermal plant within a boundary, but it is a scattered project. So lot of things we are doing to ensure that those execution challenges are not there. To name few, like one and foremost is the land which is required, and the right of way for movement of the equipment, especially in case of wind turbine generator and the blades. So what we are doing is that we are engaging with the local communities in a big way, that ensuring we want to do anything which is sustainable for the project, for the community in and around the project area. It should not, and everyone should grow. That inclusive growth is what we principally believe at JSW group level and also at JSW Energy. So just to give an example, that some of the projects where we are going to start, maybe the actual groundwork is maybe 6 months away or 8 months away. There are dedicated teams who are engaging with the local communities, identifying the needs in the areas which are key, whether it is related to children education, women empowerment, those kind of activities. Our CSR arm, along with our team of business team, where the dedicated team are there, are providing those kind of things, so that community is not impacted from any such work. These are the areas where we are really focusing. And challenges, when we talk, one big challenge, a difference which we are seeing at our energy group level, we keep on discussing on those important parameters, that any projections in past we have done, whether it is hydro. I'll just give you an example, that okay, I am designing a hydro power plant based on last 25-30 year water flow data, everything. And then what is going to be the projections, which even the CA also is doing the same. But what at our business level, what we have been doing is that we have said that past data definitely to be studied, but with the significant climate change which is happening, some future projections also from the reliable data, how it is going to, a due weightage is being given to that also, because this is a asset heavy business. I have to invest everything on day one and keep getting the returns for 25 years. So it is very important for the asset to sweat for entire life. So all those, while designing the project, designing the product, selection of geography, all those factors of past historical data plus the future projections of the climate change, so that it remains as a sustainable business and gives the desired returns to our shareholders, our investors and the company.
Would you like to add as far as funding for renewable energy business is concerned? Because we remember earlier it used to be a big challenge, when the banks wouldn't come across funding these projects. Are you seeing that as a major challenge even now, or now banks have become much more lenient?
Actually, Vikas, our experience has been completely to the contrary, and I believe that the credit markets are making a strong distinction between credit-worthy and strong players versus others, right? So just to give you a case in point, in the last 3 years alone, we have achieved financial closure for 25,000 crores of project financing loan, 100% onshore, non-recourse financing, 20-year door-to-door with 2-year construction period, 1-year moratorium, so weighted average life of 14 to 15 years. So I would say that just to share an anecdote, as Sharad was saying in the earlier segment, that we have already bagged 3.6 gigawatt or 3.7 gigawatt of additional pipeline of projects. We've been receiving phone calls from different banks who are very keen to come forward and fund those, right? So I think for reputed and credible names like JSW, there is no dearth of onshore liquidity, and the domestic markets are actually very, very attractive from a financing point of view.
Right. Before I forget, one more question on India's growing demand for power, and also, as you also rightly said, that is expected to be 260 gigawatt this year. So what kind of preparation, since Power Ministry has already asked, Chapter 11 is already there, coal imports and also running now gas-based power plants is what is being worked out. So how is JSW Energy planned to kind of meet this kind of demand in the country?
See, we have a limited role to play, but definitely we are sweating our assets and ensuring that this demand, if you see from my total capacity, the year which has ended, about 15% is the open capacity which I can give to the in the market, in the merchant, which we are definitely doing. And open capacity we have tied up to take care of the summer demand, and for the all tied up capacities, we are ensuring that that is the reason that our operation and maintenance team plays a very important role, that all my assets sweat and not on a average of 68-69% PLF where the thermal business in country operates. We believe in that we should be in excess of 90% PLF, and we are quite confident that we will be running our assets at that level.
Thank you very much, gentlemen, for talking to NDTV Profit. It was our pleasure talking to you.
Thank you very much.
Thanks a lot.